So I just wanted to get back today. I want you guys to be able to see like the thought process behind my markups this week, just so you guys can get a feel and you guys can understand where I was coming from. Because a lot of people, sometimes when I drop those markups, they don't necessarily understand exactly what's going on. So I'm about to break everything down for you guys. Give me 1 second. And let me know if y'all can see my screen 1 second. All right, bet. So can everybody see my screen clearly?
Yes.
Yeah.
All right, perfect. Is it like scrunched up or is it just it's like a good size?
You're good.
We good?
Mhm.
All right, bet. So we're gonna go over Nas100 first, and then we're gonna tap into the gold trade as well. So if you guys have been paying attention to my YouTube videos, you know I always do a top-down analysis, and then this week I just happened to do a fresh new chart. So this is a whole new chart. I don't have anything else on here but the data that I needed in order to take this trade. But I started from the monthly time frame. Click the monthly real quick because it's slow. But like I said, I started from the monthly time frame. I always start on the monthly time frame when I'm doing the overall top-down analysis, because it's super, super important to get the whole book of, like, get the whole glimpse of the story. So when I talked about in my top-down analysis, I said every line that you draw on your chart is supposed to tell you a story, and you always want to get the
breaking
whole.
up.
You said I'm breaking up. Can you hear me now?
Mike, you're breaking up. You're breaking up so
You're
badly.
breaking up. You're breaking up.
Okay, hold on. Let me see if I can fix it. Let's see. What about now? Am I good?
Kind of.
Or is it still distorted? And y'all can type in the chat box if y'all want to reach out to us. You say I'm still breaking up?
You still just.
Let's see. Hold on. Still breaking up. Let's see if I can change the Wi-Fi.
I think it's from
You say you think it's from what? Let's try something. I'm gonna see if can y'all hear me now? See if I turn my video off, and see if it give a better connection, because I don't want the bandwidth to be too high. Does it sound clear now?
Yeah, it sounds better.
sounds better.
All right, bet. So what was the last thing y'all heard me say before I started the story?
You do the top-down analysis.
All right, bet. So everybody still can see my screen?
Yeah.
All right, perfect. So like I was saying, for this top-down analysis, you always want to start with the monthly time frame, because the monthly is going to give you that overall, just the overall story of the whole book. So I like to compare the market to an overall book, with the monthly being like the whole summary. And then as we drop down time frames, those just being like words and paragraphs in the book. So we can see right here on Nas100, we can see that this was clearly in an uptrend. Like Nas100 forever has been on the uptrend. But lately, on this monthly
Breaking
time,
up, bro.
breaking up again.
Yeah, you still breaking up.
Breaking up again.
It's breaking up.
Okay, hold on. Let me see what I can do real quick. All right, bet. So everybody can see my screen?
Yes.
All right, perfect. So on this monthly time frame, I can see we was in a clear uptrend. So I illustrated that with this orange trend line right here. illustrate we was in a monthly trend line. So right now, price isn't near our monthly trend line. So this kind of is irrelevant right now, but it's still just good to have because it's like, okay, I know I'm in a monthly trend. I'm in a monthly uptrend. And then, so now I'll drop down to the weekly. So in the weekly time frame, if I was just to hide these fibs real quick, on the weekly time frame, I illustrated this uptrend because the story on this weekly trend, this trend line, this dotted trend line, is that every time price touched this dotted trend line, it pushed up, and then finally we had this break of this trend line, and then we retested it. So that confirmed that we are now in the overall downtrend on this weekly time frame. So as you guys can see, if I hit back, that's where I illustrated this weekly fib, and it gave us our point A to point B, and then we could see price pull back to our 50%. So I'm going to make this fib a little thicker so you guys can see that this is just an overall higher time frame fib. So we understand on this weekly time frame that we was in this uptrend and then price broke. So we had our break right here. Let's just illustrate this. Let's just make this pink, right? Or no, let's make it yellow. We had a break right here, and then we had a retest right here of this trend line, this dotted trend line right here. So did everybody see that break and then that retest of that trend line?
Gladly.
All right, perfect. So that's will let us know, okay, on the higher time frames, we are now looking for sell buy. So this retest happened on the week of March 28th. And then we got this bearish engulfing pattern that let us know, okay, we are really bearish. And then just from here alone, you could have, it depends on the type of trader you are. But if you're like a swing trader, everybody mute their mics. If you're a swing trader, then you could have held this all the way down to this TP. But me personally, I'm not a swing trader, and I personally wouldn't swing like Nas, especially like selling it just because it's so bullish overall. But we could see that on this daily time frame now that I illustrated this. So this red trend line is our daily trend line. And I illustrated, okay, every time price touches red trend line, it push down. So we had a point A to our point B. So now if I was just to extend this in the future, price will have to come back and break this daily trend line before we look for potential buys long-term again. Does that make sense to everybody?
Absolutely. Yes, sir.
Okay, perfect. So we understand that we have that trend line, that we have our point A, our point B. Now, what do? We drop down to a smaller time frame, because every time we drop down time frames, we want to get closer to price as possible. So with that weekly, we had got closer to price, and then with this daily, we got closer to price. Now we're going to drop down to the 4-hour time frame, right? So on this 4-hour time frame, I saw that, okay, on the 4-hour structure, and I'm going to put this fib right back down to the regular size. On this 4-hour, we could see that we were clearly in a downtrend, and we could see that we were forming lower lows and lower highs. So we had our impulse, our correction, our continuation, our correction, and then this was our overall continuation right here. That price is just now about to hit our daily TP, our negative 61.8, based off of this fib right here. So I'm going to make it thick again so you guys can see. If I was to just move this green line, this negative 61.8 price is about to hit this negative 61.8 right now. So that was based off of this daily fib though. So the structure went as such. It went impulse, correction, continuation, correction, continuation, and now price is about to hit its overall negative 61.8 TPs. Everybody with me?
Yes.
Yeah, we with you.
Okay, perfect. So based off this 4-hour time frame, that let me know, okay, price is making lower lows and lower highs. Now I still want to stay with that trend. So my overall bias has been sales until we get a break and retest of this 4-hour trend line, and then another break and retest of this daily trend line to go overall bullish for the time frames that we're on. So on the 4-hour, we illustrated that we were bearish. The daily, we indicated that we're bearish. On the weekly, we had an uptrend that got broken and retested. So that indicated that we were bearish as well. So 3 of the highest time frames are indicating that we're bearish. So there's no reason that we should be pretty much looking for buys in this case. So now as I drop down to the 1-hour time frame, I can see, okay, I want to get closer to price as possible as well. So we can see on this 1 hour, the 1 hour story pretty much looks similar to the overall 4 hours. So this green trend line is the 4-hour trend line. I can't really draw a 1-hour trend line based off of what we already have without like forcing it. Like you never want to just force your trades. So it's like if I already have the same story on the 4-hour and the 1-hour, I don't need to draw another trend line. Does that make sense to everybody?
Yes, sir.
Yes.
All right, perfect. So now that I understand that the 4-hour and the 1-hour is pretty much the same thing, that lets me know, okay, I can drop down to another time frame. So I dropped down to the 30. Once price on Sunday, when I marked it up, price was about right here. And I was like, okay, well, we had just taken out these lows. So we had this level of support right here. That was just a level of support that previously had just got broken. So that let me know, okay, well, anything that's broken in the market, we always looking for a retest. So we understood that on 30-minute time frame, we just had a break of the lows. Now we know, okay, we have to have a retest for price to continue. But also on the 30-minute time frame, since we did break that low, that gave us a new point A and point B to draw our fibs. So if I was just to delete this to show y'all what I was looking at, we had this point A, and then we drag this down to our point B where price made our new low, and then we just drag it across. And then let's just make this like this. All right, so boom, price pulled back up to this 23.6, and I was looking for price to consolidate in this area. Just because the way price ended last week, it was kind of like we had an impulse down, then we came right back up. So I was looking for a little bit more consolidation before we dropped, but ultimately the market just started to tank. So the way you would have caught this trade if you didn't catch it from like up here when it broke and retested this zone is if you would have dropped down to the 15-minute time frame. So as we both know, like indices, they move really fast. So you have to be able to like drop down to a minor structure to catch your entries. But ultimately, you can't drop down to the minor structure until you have the overall bias of the major structure, because I've seen a lot of people trying to like buy this right here, but you would have got your head knocked off because you didn't understand the overall bias of the overall main picture. So we had the weekly that had got broken and retested. So that illustrated that we on a weekly time frame, we were looking for sales. On the daily, we were on a downtrend. On the 4-hour, we were on a downtrend. On the 1-hour, we still in the overall downtrend because it was the same story as the 4-hour. So we had 4 different time frames telling us that we are in an overall downtrend. There's no reason that you should be taking buys in this case scenario unless you're like a scalper. But if you're not a scalper, then the overall bias should be looking for potential sales. So at this point in time right here, we had this green line right here. I had an alert set on this, and I honestly didn't even take this trade because I was already in gold and I just didn't want to like force it. So I was just like, okay, I'm gonna chill out on this one. But this was a perfect break in the retest. So we had this level of support right here. We had our break. Price broke this level of support, came back up to retest, and then it gave you candlestick exhaustion. So for those that don't know what exhaustion just means like price can't like make it any further up. And if you study like your candlestick anatomy and understand what the candlesticks are telling you, then it's more easier to understand like breaks and retests. So anybody that's like struggling with reading candles, I suggest you like read like the Candlestick Bible or like watch some videos on YouTube to understand like what the candlesticks are actually telling you. But as we drop down to the 5-minute time frame, we could see that we had a lot more exhaustion. And when you trade in indices, you kind of got to go to like the 5-minute time frame to get those sniper entries. But we had wick exhaustion. Then we had a doji candle followed by a bearish engulfing. So that let us know, okay, there are now more sellers in the market than are buyers. And then you could have entered your position right here and stop loss above the wicks of the previous high. This is based off of the structure on the 5-minute time frame. And then you would have been targeting your overall TPs, but your TPs was based off of this 1-hour fib right here. And then also you had to be mindful of the overall structure from the higher time frames in which we got from our daily and our weekly. We had this fib and we still realized that we hadn't touched this negative 61.8 yet. So that was ultimately, that's the overall take profit. But as far as what I had for the markup that I gave for the week, I only had it going to this negative 27 because that was the given for the actual week based off of the structure that we had. Does that make sense to everybody?
Yes.
Okay, perfect. Does anybody have any questions for me so far?
Hey, Mike,
So,
was that the only entry that we had? Because we passed that breakout point up top, right? That was the only other entry that we had. Couldn't we get in like before that entry?
so me personally, no. The way I enter the market, no. So I only enter the market on breaks and retest. So
Yeah.
until you had an actual break of structure and price come back to retest the level, then you would have had no other entry. Like, I mean, of
Okay.
course, you could tell, like anybody could tell you, yeah, I would have entered right here. But me personally, I only enter off of breaks and retests. So it's like I was only gonna enter when price came back. Like when my alert started going off at this green line, I looked at it, but then I was already in gold. So I was just like, I'm not finna, force it. Like I'm cool where I'm at. So,
Right. So that's the safest. That's like the safest entry after that break happened.
yep, the
The
break
one
and the
up top.
retest. Yep. So
Yeah,
your
okay.
entry after you got this confirmation candle, like, okay, we got a bearish engulfing, letting us know that there's seller pressure in the market, indicating that the buyers are no longer present.
Okay. All right. Cool.
Hey, Mike, I got a quick question.
What's up?
On your break and retest of the trend line, what's the lowest time frame that you look for the retest on? For example, let's say you draw a fib on the 1 hour and you're waiting for that break and retest. Are you still waiting for the break and retest on the 1 hour, or can you drop down to say the 15 or 5 to look for it? Because I know it'll hit on the 5 or 15 minute, before it hits on the 1 hour.
Yeah, so there's always phases. So you're gonna have a minor structure break and retest before you have the overall major structure. So if you're looking for a 1 hour trend line break and retest, you might have a 5 minute, 15 minute break and retest, but that break and retest is only gonna go so far before price comes back around and retest on that 1 hour time frame. So it's more so. Let me see if I can find an example. Let's see. Okay, so like right here. So we had this 1 hour trend line right here.
Mm-hmm.
Let's just make this, I'm gonna make it bold. So we had this 1 hour trend line.
Mm-hmm.
And then price broke and retested on the minor structure right here. So we had this break right here. And then we had this retest on the minor, but then price pulled back for its 1 hour major structure retest to eventually get that overall major move. So you have a minor break and retest that you could have took advantage of right here. And then if you just do your fibs from point A to point B, see price hit your negative 27, that was the minor structure move. And then once price gave you another point B, you could have adjusted the fib, and then price pulled all the way back up and then hit your negative 61.8 TP. That makes sense?
Yes, I can catch two moves almost on the minor and the 1 hour. Okay, gotcha.
Yeah, if you understand major and minor structure, correct.
Gotcha. Okay, thank you.
Yep, no problem. Anybody have any more questions over this Nas before I move on to gold?
Hey, Mike, I got a question.
What's up?
With the major and minor structure, what is that? I don't know what those are.
So a major and minor structure is just structure, but it's more so just understanding what is the overall higher time frame move and what is the lower time frame move. So having smaller moves, like a major time frame could be like a 1 hour or 4 hour daily, and then the minor structures more so like the 15 minute to 30 to 5 minute, just depending on what you're trading. But it's just understanding what's happening, because there's always a flow in the market. So the market moves in 3 phases. It goes such, impulse, correction, continuation. So this could be like a major structure move, but inside of this major structure move, you're gonna have minor structure moves that occur during this overall major structure trend. Does that make sense?
Right.
Yeah, I kind of see it now.
Okay, perfect.
Yeah, I got a question.
What's up?
Can you go back to that example you just showed?
The trend line breaking retest?
Yeah, the minor and the major one.
Yeah, right here.
If you got in that minor one, how would you know to get out? Or do you put your stops to break even?
So in this case, honestly, I get out the market with my fibs. So when it hit price hit TP, that's when you would have knew to get out. It hit -27. So that's your exit point right there. But also, if you don't use the fib, then you could have just looked left and you see that you at a current level of resistance. So anytime you get to a level of resistance, you don't know if price is going to break this level. Well, resistance turns support. You don't know if price is going to break this level. So you have to be mindful. So a lot of people lose trades because they try to hold on to something too long without having full confirmation that this is going to break. Because at this point in time, you don't know if this zone is going to break or not. So it's wise that you take at least some of your profits here. And then once you get that full break and retest, you could just enter here again to catch the overall move. But also you have to be mindful that we did just break a trend line. And when you know anything that's broken, oftentimes has to be retested. So you have to keep that in the back of your mind. And once you got that retest of this trend line, then you know, okay, now I have a point A to point B, and I can draw my overall major structure fib to capitalize on that whole move. Does that make sense?
Yep.
Perfect. Anybody else have any questions in regards to NAS?
Yeah, another question.
What's up?
I missed a trade on gold today. Yes, when the trade line broke, I was waiting for a retest and it never happened.
You said you had a trend line and it broke and the retest never happened?
Yeah, I was waiting for the retest to get on the trade and it never happened. That was on gold today, the one you.
You said the one on gold?
Gold, yeah, gold.
Okay,
One
yes.
you went out yesterday.
Okay, yeah. So sometimes you're not gonna get a retest of the actual trend line in the markets. That's just like full transparency. There's not always gonna be a retest of the trend line, but if you understand structure along with trend lines, then you can capitalize on a break and retest of like horizontal levels of support and resistance, or without having like a break and retest of the trend line. So I'm gonna come back to your question once we get straight to go, but I want to make sure everybody doesn't have any questions before we move on. And then I'm gonna do a top-down analysis on gold. And then once we get back down to the entry on my entry for gold, then I'm gonna refer back to your question. Okay.
Okay, got it.
All right, perfect. Anybody have any more questions about NAS? Everybody good? Cool. All right, so now let's go to gold. So we start from the monthly. So we can see on this monthly time frame, if we zoom out, the story on this monthly time frame is that every time price touches this line right here, it bounced up, it bounced up, it bounced up. So we could clearly see that we're in an uptrend. But like I said, the monthly trend line is so far away from price right now, it's pretty much irrelevant. But me personally, I just mark it just for like top-down analysis purposes. But also I pay attention to the monthly candles and see what's going on. So we could see on this monthly, the last 3 months, we had a lot of wick exhaustion in this area, and this is starting to form like a double top pattern. So that's letting me know that there's a lot of sellers in this area when price came up to these highs. So that's letting me know off the rip, okay, there's a lot of sellers, because if you think about it on the monthly time frame, you get a lot of exhaustion like this, that's a lot of data. And that means there's a lot of seller pressure because the time frame is such a large time frame. So that's a lot of data being reciprocated on this monthly time frame. So we have to be mindful of that as well. So now we drop down to the weekly time frame. You can see that, excuse me, mute your mics for me, please. You can see on this weekly time frame, the dotted, I drew that we was in this uptrend because the story on this uptrend was that every time price touches trend line, it bounced up, it bounced up, it bounced up. So now let me just clear these fibs off for y'all real quick. I really don't want to clear them, but just hide these real quick. So, all right, so everybody can see that weekly trend line where I got it, where I drew it from down here. So we had this uptrend, so that let us know, okay, on the weekly we're on the uptrend. But you have to be mindful. So when you come to an area like this weekly trend line, you're so close that's when you start to like realize like, okay, I need to be mindful to make sure that price is not going to come back and touch that area, because we can see that price respected this weekly trend line once, twice, 3, 4 times recently. So that's recent data right there. So there's a high probability chance that price can come right back to that weekly trend line just because it's been respecting it so much. So I have that in the back of my mind, like, okay, the weekly is in the uptrend, but we're coming real close to that weekly trend line, and there's a high probability chance that price can make it back to that weekly trend line. So I got that in the back of my mind. Now I'll drop it down to the daily. So in the daily, in this case, I could see that this was in a previous downtrend on this daily time frame, but sometimes you have to look left to get right to understand like where you're going. So I understood that once price broke and retested this daily trend line, that's when we started this uptrend, but we only retested it on minor structure. So just how I gave that example, how you have a minor structure break and retest, and then you'll have the overall major structure break and retest. This is a prime example. So we had this break right here and then a minor retest, which happened like on the 1 hour / 4 hour. And then we got this push up, but we never got this overall break and retest of this daily trend line right here. And that daily trend line is in alignment with this weekly trend line. So that's a lot of confluence right there to let us know there's a high probability chance that the market is going to come back to this area, because we had a trend line break and retest on this daily time frame that never got retested. And we also are in alignment with this weekly trend line. So like I said, the market moves in 3 phases. 3 phases go as such: impulse, correction, continuation. So we could see that we had this brand new impulse. We are now getting this correction. And now we need to see if price is going to give us some rejection at this area to eventually potentially go and get this overall continuation. But we don't try to predict the market that far into the future. We only react to it once price gets there and we see what price is giving us, because we don't try to just say, oh, it's going to go up just because that happened. Like, no, we need to see more data first before we predict anything. But based off the phases, that is a high probability chance that that can happen. So on this daily time frame, I illustrated this trend line. I said, okay, there's a probability that the price could come back to that. So I got that in the back of my mind. So now I'll drop down to the 4 hour. Like I said, every time I drop down the time frame, I want to get closer to price as possible. So we can see that I illustrated this downtrend on this 4 hour, because every time price touches this green line, it pushed down. So we can see that we were previously in this overall uptrend, but then price broke and retested that uptrend. And then that's how we started to get this overall downtrend. So if I put these fibs back on, we can see now that gave me a point A to a point B. That let me know, okay, now I can see where my overall projections are based off of this overall fib. So we can see price pulled back to this 50% and price never hit this -27. So you can see I have an alert right here saying TP smash, because that was the overall projections. And that's what I have for this ghost pattern, because we can see that we're still in this overall downtrend, but price never hit this -27. So when I gave y'all that markup, in the back of my mind, I'm like, okay, well, price is still making lower lows and lower highs in this overall downtrend. So there's still a high probability chance that we're going to come down and hit this -27. Plus, I have in the back of my mind that we haven't retested this daily red trend line, and this weekly trend line right here is so close. So it kind of all was like confluence amongst itself. Like we had so many confluence to let us know that the market is potentially still going to be headed down. So with that being said, now I drop down to the 1 hour. So 1 hour, I want to get closer to price as possible. So on this trend line right here, a lot of people would have drew it like this, but me personally, I don't like to draw my trend lines that take me out of the price, because I could see that we had rejections right here, and then we had a rejection right here. Even though we broke and retested this trend line and pushed up, that was still a rejection off of this trend line. And then we had multiple rejections right here. So that let me know I'm going to draw my trend line based off of this median of price and not adjusting it out to right here. That's going to take me out of the loop, because you see how this only has 2 touches versus this one has 1, 2, 3, 4 different scenarios where price respected that trend line. So that's why I drew that black trend line right there. So from that standpoint, from there, we got, we understand now on the 4 hour, we're in an overall downtrend. The daily, we were in we were broke our downtrend, but we never retested our daily trend line. And then on the 1 hour, we in this downtrend. So then I dropped down to the 30-minute time frame, and that is when I drew this blue trend line that I tell you guys to wait on the break and a retest. And so to go back to the guy that asked about that question, saying that you didn't get the trend line break and retest. So this one right here, this is why I say you would just have to understand structure. So last night we were right here. We had this price sitting right here. This is when you say, okay, I'm on a minor structure uptrend. We were making higher highs and higher lows on this minor structure. So once price broke beneath this previous higher low point and retested it, that gave you validation that this trade was not ready, because like you said, it never came back to retest this actual trend line, but it did give you the break and a retest of this green level of support, which is structure. And sometimes you, like I said, you're not going to always have a trend line break and retest, but you will have a break and retest of some sort of structure, whether it's a horizontal level of support or like a zone. Does that make sense?
Yeah.
Yes.
All right, perfect. So from that point, when I got to this 30-minute time frame, the story on this trend line was every time price to this trend line, it bounced up, it bounced up, it bounced up. So that's why I gave y'all a note saying sell only if it breaks and retests that trend line, because then that lets me know that this correction based off of this overall higher time frame is now over. So we have our structure, we have our impulse, our correction, our continuation, our correction. And I had to see if this correction was finished before calling any sales, because price could have came back to this trend line and bounced up a couple more times and then pushed down. But when you got the trend line break and retest along with this structure break and retest, that gave you full validation that price is now about to continue down to this negative 27 TP. So I drew this fib from our point A. So this is our impulse, and then our correction, and then our overall continuation. And I had my TP set based off this negative 27. So as far as the entry that I gave out on my signals chat this morning, I called this sell right here based off of structure being broken and then retested this level of support right here. So you see where these wicks are. If I just drag a zone right here, price broke this area and then retested and gave wick exhaustion, telling me that there are no longer buyers in the market. There are now sellers. So then I took advantage of that and I entered. And then of course, my TP was this negative 27 and also this negative 61.8, but we still had to be mindful of this overall major structure fib, which is this negative 27. So that's where my overall projections was based off of my higher time frame analysis. Does that make sense to everybody?
Yes.
Yes, you do.
So you see how I got my projections and I got my biases from the higher time frames, and then I went down to the lower time frames to capitalize on the entry. So a lot of people, they oftentimes they just want to come to their charts and they want to be on the 15-minute time frame and they look for structure and like, oh, it's a structure break and retest, but they're completely lost of where they're at in the market in regards to the major structure. So if you lost in the major structure, you have to think about it like the major structure overrules the minor structure. Like, yeah, you're gonna have minor structure breaks and retests, but the minor structure always can easily get broken. So therefore, we have to pay attention to the higher time frames and let it tell us what's going on the overall major picture. Does that make sense to everybody?
Yes.
All right, perfect. So when price came to this negative 27, I pulled my trade here because honestly, it was 100 pips in profit. I'm not about to let the market pull back to this zone potentially or to this trend line right here and then push back when I was already 100 pips in profit. So me personally, I just pulled mine right here. And if it comes down to this negative 27 major structure TP where the stick blue line is at, that's perfectly fine. But you can always catch another entry. So for those that's looking to trade this potentially, what do we just have? We just had an impulse. Now we have a correction, but we have to wait to see how far this correction is going to go before we get this overall continuation. But like I always tell you guys, we do not try to predict the market. We only react to it. So ultimately, if we start to come up here and then we break and retest this trend line, then we just gonna carry it up to this black trend line and then see what it does from there. But you got to take it baby steps. Like you can't just assume stuff is gonna happen without having validation for that actual move. Does that make sense to everybody?
Yep.
All right,
Yes.
perfect. Does anybody have any questions for me?
I have a question.
What's up?
So when you were trading this week, like did fundamentals play a part in any of this, or did you just do all technicals?
100% technicals. Honestly, like I look at the Forex factory and stuff like to see, but if it's not like any like major news going on at the time, I honestly don't really like. I look at it, but I don't really tie it into what's going on because honestly, it's going to show you the technicals are going to tell you what the market is going to do even when the like fundamentals come out. Like only thing about fundamentals is like sometimes when news drops, you might get a big spike or a big wick or something that could potentially take you out of the trade if you have like your stop loss too close or anything like that. But ultimately, the trade itself is lining up before the fundamentals even drop. So in this case, I did all this just from a technical analysis standpoint, and then just put the story together case by case. So the way I try to look at it is like, if y'all ever watch First 48, y'all know that they have suspects that they can't arrest until they build a case to have like validation for that like murder in that case, or saying somebody killed somebody. So in my case, I look at the market like First 48. I have to build my case 100% before I get in any trades. And doing a top-down analysis is like building your case. So it's like, okay, this person was here at this point in time, X, Y, and Z. And then you say, oh, he's a high probability suspect. Same thing in the market. If you have X, Y, and Z happening, then it's like, oh, this is a high probability setup based off the information that's given. And then once you have enough data to close the case, boom, you take it to trade. Does that make sense?
Yeah, I love the analogy. Thank you.
Yeah, no problem. Anybody else have any questions for me? Y'all good? Y'all good?
Hey, Mike.
Oh, what's up?
Yeah, sometimes when you I go through some of the videos you post and I try practicing it, when I watch it, it seems it's easy, but when I try practicing it, it gets harder, like when I try trading.
Right. So ultimately, I feel like it's going to be hard because you don't know like exactly what you're practicing. Like you kind of got to have like a set thing that you're practicing. Like when you watch the video, when I give examples, of course it's going to seem a lot easier just because it's like, okay, I'm giving you good examples on the video to like, so you can see it clearly, but you have to be able to train your eyes to see it. So what I would recommend is to focus on like one thing and one style, because oftentimes when people get confused in the market, it's because they're trying to take what they learned from player A over here that taught them this, and then they try to incorporate it with player B that taught them this and mesh both of them together, and it starts to confuse them because they're starting to see things that they learned from one person and then things they learned from another person and put it together, and it's kind of like throwing them off. So my recommendation is, if you're gonna watch my YouTube videos, then study the information that I teach and only study that for the most part, or study people that have similar styles to me. Like I learned from my two mentors, Clint and Jessica. They trade very similar in a sense. So all like the impulse, the correction, stuff like that, that's the same type of concept. Then you have people that trade completely different, that use like indicators, or they use institutional trading, or they do smart money concepts and stuff like that. So they see the market a lot different. So I would recommend just picking like a style and then working on trying to like perfect that style based off the information that's given to you. Does that make sense?
Yeah, thank you.
Hey, Mike.
What's up?
Hey, on the middle there, where you got your trend line, and it breaks your trend line, and then it kind of gives like it's gonna break and retest there, even though you know your overall basis. How can you what should you pay attention to so you don't get caught in that mistake? Because it looks like it's great break and retest and go the other
Talking
way.
about right here or right
No,
here?
up there, right there, right there.
So this one right here, it's subjective. So, all right, we go to the smaller time frame. On a smaller time frame, it did break and retest 100%, and it hit TP. So in this case, you have point A to point B, price pull back, retrace, and then hit TP on this minor structure fib. So you're supposed to exit the trade right there. But like I said, when you going against the trend, you got to be very like mindful of like taking your profits out the market, because ultimately we understood that the overall bias was sales. So if you still trying to buy here, it's kind of like, all right, you kind of playing with wildfire. So in this case, the average person probably wouldn't have pulled this at -27 unless they understood like the structure.
Minor structure, yeah.
It's just like, that's just one of them cases where you kind of gotta wait to get more data, because you could have still held this, but once price came back in here like this, then it's like real aggressive. Then that'll let you know, oh, okay, this not finna make it. Like this not about to, like it's not about to continue buying. And then when you look at structures in regards to just the minor structure, impulse, correction, continuation, correction, continuation. Once these lows got taken out, that lets you know that this temporary uptrend was now invalid. Does that make sense?
Yep, absolutely. So then when, you know, it made that and it finished that, that minor structure, maybe your instinct would have kicked in to say, maybe I should adjust my trend line to that higher point. So what makes you say, don't adjust it?
So that goes back to what I was saying, like the median of price, how I said, if I was to adjust it like this, it's going to take me out versus, well, I didn't have this trend line. Like, well, I had this trend line when I drew it, when I remarked up, but at this point in time, I hadn't traded gold for like a while. So this point where it broke and retested, that trend line is still valid because we still have this right here, this 1 touch, 2 touch, and now 3 touch. So even that it broke back in, price could still come back and test the backside of this trend line like it did right here. So if I adjust it right here, that now makes my trend line like not invalid, but it's taking me out of the loop. But at the same time, it's like a real thing called like trend line fanning, and you can draw multiple trend lines. So you could have had this trend line and then you could have fanned it out to have another trend line like this. And it's nothing wrong with that. There's nothing wrong with this at all. So you could have had multiple trend lines to say, okay, well, majority of the price is right here, but price made a high point right here. So I'm gonna put another trend line. And then if you would have seen another break and retest of this trend line, then you know for a fact that you're going up past this point. Makes sense?
Got you. Thank you, sir.
Yeah, no problem.
Hey, Mike, I got a question for you.
What's up?
Hey, so when you're doing your top-down analysis, you drop them from monthly, weekly, daily, like is there a certain data point you won't go further to the left on, or is it just you just looking at it based on structure?
I'm pretty much just getting a feel for it. It's kind of like, it's not like a concrete answer to that. So I just kind of look to see what's important to me right now. So like how I was giving an example on the monthly, like even though I drew that monthly trend line, like I know that's not valid to me right now. Like even though like I put it there, but it's not valid. I mean, it's not like important to me right now. So I'm not really caring about the monthly trend line. Even though I do it, I just start from the monthly. That's just like my routine. Like I just always start from the monthly, but I still pay attention to like the candlestick, like structures. I was saying we had this double top. That's what's valid right now. That's what's important to me. So these 3 candle sequences, that's telling me more than what that monthly trend line is telling me at this point. So I'm gonna pay attention to that more. So like from this monthly time frame, I'm getting this data based off of these 3 candles right here over that monthly trend line. Does that make sense?
Yeah, it do. Thanks.
Okay. Any more questions?
Yeah, Mike, I got a question.
What's up?
That page you or the monthly I think you were just on. What
Uh-huh.
are all those what are all those lines? You see right there on the side it says monthly. Like what
Yeah.
is that? How
Oh, that was just like my foundation levels.
what is a foundation level?
Just like an area of like support and resistance.
Oh, okay.
But if you watch my support and resistance video on YouTube, then you'll get a better like understanding of how to draw those. But they not the exact same, but it's similar. But this is just stuff I got from my mentor, but I don't teach that type of stuff. But they just support and resistance levels to answer your question. Any more questions?
Yeah, Mike, I got one. What's happening, man?
What's up, man?
Real quick. Okay, so you got your the gold just played out, and about how long do you give that chart like time to breathe, and you kind of leave it alone, and then you'll come back to it?
That's a great question. So it just depends on the type of trader you are. Me personally, I'm not trying to be on the charts like all day. And also I'm not one to hold like more than a day. Like I don't like holding trades for like more than a day or two. Like that's just not my style. And one part, like it's important to know yourself as a trader. Like me personally, I know I don't have the patience to just sit there and hold like trades, like swing trades. I don't do that. I would rather just get in, take my profits, catch the next pullback, get in, take it down to like a minor structure TP, get out, let it pull back again, and then like just ride the whole way down. Like some people, they would just take one entry right here and hold it all the way down here. Me personally, I'm gonna take an entry and then I'm gonna cut it at, let's see, let's use this arrow. I'm gonna pull it at this level of support, wait for a break and retest, and then catch it all the way down again. And then I'm gonna catch it on the way back up, and then I'm gonna catch it on the way back down, and then I'm gonna catch it back on the way back up. So like more so I trade in between sessions for the most part. So like this gold, it hit that -27. You can see it's been consolidating there for the last couple hours. So now I need to know like, okay, I need more data. From right now, I can't do anything with this gold chart besides stick to my overall top-down analysis bias. But once I start to get some more structure for them, then I know I can get back to that trade. So to answer your question, I guess it's like, I personally take once it hits like my minor structure TPs for the most part, then I'm gonna let it breathe to see, allow it to give me more data before looking for another entry the next day. Because like I said, I trade in session. So I'm gonna be looking for a setup. If I'm up during London, I'll look for a setup then. And if I know my pairs, that's another thing. You gotta know your pairs. I know gold moves majority of the time in New York session. So right now it's just in this little consolidation phase because we're in Asian session. But once New York and London starts to get here, then it's like, okay, then I'm gonna be looking for more moves based off the data that's given to me at that point in time. Does that make sense?
Yeah, definitely. All right, bro. Appreciate you.
Yeah, no problem.
Yeah, man.
Hey, Mike, I got a quick question.
What's up?
Can you drop down to the 15-minute?
Yep.
So this is to piggyback off what the other guy said about how would you know, like how it, from that 1 hour trend line and it kind of went above the break. Could you have drawn a trend line from that wick exhaustion right there bouncing off your 1 hour structure, where the yellow zone is, and drew the trend line up to see that it broke and retested that to know to get out, connect it a little closer to the bottom of the low? Yeah, right. No, okay, never mind.
Right here. This is what
Yeah,
you're
never
talking about?
mind. I thought it would have hit the
Or
bottom
you
of
talking
it.
about like this? You could have drew this one. This one's a better. I wouldn't. This one is kind of stretched right here. But
Okay.
like this is just like I said, understanding structure, understanding that we had.
Oh no, I'm sorry, because this isn't the week that you started. This is not when you drew the ghost pattern. It's that other
Right.
one right here. Come down. Yeah, right there.
Yeah.
Yeah, but draw it up closer a little bit.
up here, or talking about right
Yeah, somewhere in there. I was playing
Like,
around with my chart,
this
but I had
one?
saw that it kind of broke and retested right there. Could that have been another entry to get in?
Yeah, 100%. So let me just do this real quick. So if you would have had this was a break and retest right here, but it was just like real minor. So this break and this retest. So you could have caught it right here. That was a good entry, but me personally, I didn't catch it right there.
Okay.
But yeah, that was still valid though, 100%. But it just didn't look as clear to me because you didn't get like a strong break. Like if we would have had a push like down like this, and then a retest like this, then I would have been more so. But you see how price was just like consolidating here, then it pushed down real slow, then came up and retest, and then it was just making its way down slowly, and then it started to gain momentum as it got into its session.
Gotcha. Okay. Yeah, I was just curious because we already knew what the overall structure was, but we don't want to predict the market like you said. So I guess you're right.
Right. No, 100% though. That trend line was definitely valid though. 100%.
Hey, Mike, I got a quick question for you, man.
What's up?
Like a two-part. So first one is kind of piggybacking on what you were saying before. Is it just like a particular time that you would trade? Would you put on trades at all in Asia session, even if you get some alerts hit, or you just trade in the US or London?
Yeah, if my alerts get hit in Asian, yeah, but majority of the time, I don't really like trading during Asian because the market it's not like flowing the way I want it. It don't have enough like volatility for the most part in Asian for the pairs that I trade. So it's like it boils down to what you're trading, because like if you're trading an Asian pair, then it's like you're gonna see those moves during that session. But me personally, I trade gold, I trade US 30, NAS. So like even when I'm trading US 30 and NAS, majority of the time, I really don't have to like be ready for it. Well, let me not say that. I don't really have to like look at NAS until like 9:30 Eastern time, because that 9:30 Eastern candle is when it like usually makes its move or retest a structure that it broke or like anything of that nature. So it's more so understanding what it is that you're trading, because I mark up like it's one thing you got to do as a trader, but I just believe in this, but you got to like marry your charts. So right now, I understand I have this bias, but later on tonight, like 12-1, I'm gonna look to see what my potential moves are for the next day, and then I'm gonna set my alerts. And then when I wake up in the morning, if my alerts are near, then I'm gonna be on the computer. If my alerts are nowhere near, then it's like, okay, I'm not even trying to look at the computer, because I don't want to just wake up to trade every single day. Like that's like going to work. Yeah. You know what I'm saying? Like you want to be free as a trader. So like I'm gonna get on, and if I see something, then cool, I'll get on the computer. But if I don't see anything by my alerts from the previous night or anything, then I'm not gonna trade that pair for that day, and I'm just go do something else.
Okay, and then for like I trade a lot of pound pairs. Do you think I have to stay up late, or the US session should be cool? Like I still see enough movement.
No, it's just, what time zone are you in?
I'm Central.
Okay, so that's 2:00 London session. So GBP pairs, they move a lot during London. But oftentimes like the moves set up before like London hits. So we just go to like GJ. Like sometimes you'll see, let's look at this move. So 2:00. So we had this move set up, and then it was ready at 5 a.m., which is just like the beginning of London session, almost starting to New York. But it just depends on like your life. You got to make trading fit your life. So even if you catch like a small push down, you also have to know like what type of trader you are. If you scalper, are you content with 20 or 30 pips? You can easily catch 20, 30 pips on GJ and Asian session. But you have to understand that that's pretty much all you're going to catch. You're not going to catch 100, 200 pip move during Asian session on GJ, unless like some news happens, of course. But during that London session or that New York session, you might catch that 100 to 200 pip move. But you just got to understand, like, what are you content with, and who are you as a trader to understand, like, how many pips are going to feed you, you and your family. How much of the pie do you need to feed you and your family? Makes sense?
Yeah. Sorry. Last one, man. Like for the indices, what time frame do you drop down to for like analysis and also for entry? Do you go like all the way down to 5? Do you go down to the minute or just 5?
No, sometimes I go to the minute, but like that's only like if I'm trying to like snipe it. But usually I usually just enter like on the 5 or 15.
Okay.
But I do, like I said, I do my analysis. You always start from the highest, because if you don't start from the highest, you're gonna get caught up in the noise of the smaller time frames.
I got you. So trend lines and zones, you do on the 5 as well on the indices.
Yeah, like this is like a 5 minute, 15 minute zone right here. That was broken and retested. That gave you a perfect entry to catch this sell down today. And this was like, how many points is this? 300 points.
Okay,
and that'll make your week right there.
No, for sure. All right, thanks, bro. Appreciate it.
Yo, no problem.
Hey, Mike, I got a question for you.
What's up?
Hey, do you have any tips when it comes to spotting divergence? Like, I see for me, there's always an issue of like when I'm trying to find my confirmations, how to spot divergence.
That's all about training your eyes, bro. To be honest, to be like completely honest, it's like you just got to. It's literally about training your eyes to see, because like when you get divergence like this, it's divergent right now. Like it's starting to diverge. You see how like it's not like a full-blown trend, it's just starting to make its way down like in its channel-like form. So let me give you like some, I'm about to give y'all some nuggets right here. Hold on. So when y'all have like divergence, y'all have like these channels that's forming. This is what we call a ascending channel. So we have price ascending, but it's not like flowing like a normal trend in a sense. So we have this ascending channel, and then you have to wait for that channel to break out. But this is, like I said, this is about training your eyes. So if you could see this, then you could spot divergence, because ultimately this is going up, but then on divergence, it'll be, going down, or like vice versa. So like, it's all about training your eyes. So I remember when I was first learning how to trade, I would just like focus on particular patterns and then like try to master those patterns. So like this case right here, this is a descending channel. You have to be able to like just to recognize that. So as far as like being able to notice it, you just have to know what you're looking for. So let me find some quick examples of, let's get off the indices. Let's go to like a Forex period. Let's see. All right, so like this right here, like this is a divergent structure. So you see how we had that same pattern I just drew out on Nas, like it's the same type ordeal. We have the same flow. It's a descending channel. And then once you know, like, okay, I have to wait for a break and a retest, then that's how you capitalize on those divergent structures. But you have to know what you're looking for. So we see that we have this downtrend, but then price is coming up on the RSI. So also it's like important to understand, like, where are you looking for your divergence on? Are you using MACD, or are you using RSI, like, or using something else? Like, it all just depends. Did that answer your question?
Yeah, thank you. I appreciate it.
Yeah, no problem. So my recommendation, bro, is just to study, like literally go to your chart and find examples of divergence on your chart, and then train your eyes to see stuff like that. And then over time, your eyes become adaptive to say, oh, because it's just like going to school. Like when you learn shapes or when you learn how to read and write, like you naturally, you just kind of get that understanding, like, okay, this means that. So once you train your eyes to see what it is that you need to see on the chart, then your brain is going to associate with, oh, this means that, this is divergent. Oh, I see that. Like right now, I don't even have to, like, I spot divergence from a mile away just because I've been studying it so long. Like even like right here, we had this level of divergence. And sometimes it depends on the time frame. You'll see divergence better on certain time frames than others. Like this 15-minute, this is clear as day divergence. But on a 1 hour, you might have not saw it clear as day. Or on a 4 hour, you might have not seen it as clear as you would have on like the 30-minute or the 15. Does that make sense?
Yeah, that makes sense. Thank you.
Yeah, no problem.
I have a question.
What's up?
When you're looking at the fib and you're assuming that it's going to go to the negative 27, how do you know it's going to hit the negative 61? Because I know sometimes it stops at the 27 and it turns, but do you know, like, is there anything that you can look for to know it's not going to get to the negative 61?
So my recommendation for that is to like understand like, are you, when you get to your negative 27, are you having a lot of like bullish or bearish momentum? So if you come here and you have like your point A to point B, and then you get to this negative 27 and you start to see some wick exhaustion, then it's more so best to like pull it, because you don't, like I said, you don't know if it's going to break. So I would just learn to understand like what is going on with the candlesticks. Am I getting a lot of pressure? And if price is just breaking through here aggressively, then I'm gonna hold it to the negative 61.8. But if I'm getting some exhaustion and some resistance is starting to form at this level, then I'm gonna pull it, because this price is clearly telling me that I'm not gonna make it any further. Does that make sense?
Yeah, it does. I get that. Thank you.
No problem.
Hey, Mike, I got a quick question to follow up on that.
Yeah.
Like going to that negative 27 versus the negative 63, does it also depend on how far the pullback is? So let's say we get a pullback to the 61.8. Does that, determine kind of also if it goes to the 27 or 60 or the negative?
Yeah, so kind of think of it like a slingshot in a sense, like the farther you pull it back, the farther the slingshot is gonna go. But it also depends on like if you're on major or minor structure, because sometimes you can get to a negative 27 on a major structure, but that was like a negative 61.8 on a minor structure fib, and then it completely reversed and vice versa. So it all really just depends on the structure. But to answer your question, yeah, like the farther it pull back, yeah, the more likely it's gonna push down to this negative 61.8 like a slingshot.
Gotcha. Okay, thank you.
Yeah, no problem. Any more questions? We've been on here for a good hour. This is gonna be a good video on YouTube. Y'all gotta make sure y'all watch. Somebody say something.
Yo, Mike, I got a question.
What's up?
Whenever the fib is complete, what do you look for after that? Do you just let the market play out a little bit?
Don't do anything. Once your fib is complete, get out.
Yeah, that's what I was thinking.
Yeah, like that's where a lot of people go, and it's a psychological thing, like because ultimately I use fibs for my TP. So like if it hits my TP, there's no reason why I should still be trying to like get more out of the market for no reason. Like once it hits your TP, get out and wait for another setup. Like you made the money, don't give it the market a chance to take it back from you. Take the money, stack it, and then live to trade another day versus trying to hold on to it. Like, and then you gotta think about it. Sometimes like trading can be stressful. So like, why would I would rather just take my money, know that I made my money for the day, and then go enjoy my day versus trying to hold on to a trade, wondering if it's gonna go further past my negative 61 or my negative 27. Like I would rather just be free. Know I secure my bag. You know what I'm saying? All right, anybody else have any questions?
I just wanted to say, Mike, thanks for your time and, going over everything. This was very, very helpful. So
No problem.
thank you. Mhm.
No problem, no problem. So what I've been thinking about lately, since I finally got settled in with the move and stuff, I'm thinking I'm a start once I can figure out how to like get my YouTube and my Zoom set up. I'm gonna try to start like doing like YouTube streams, and I want to do them like maybe like once a week or like once every 2 weeks, because I still want to give like y'all this information. Cause I know what this skill set could do for y'all, because I know what it did for me. So it's like, if y'all could like follow me and understand like, okay, this is somebody that I could learn from, that I want to be able to help y'all along your journey, because ultimately I wouldn't be where I am without the help of others as well along my journey. So I used to get on YouTube and I used to study my mentors. I used to go back and watch all the free calls that they used to do on their YouTube. And I used to like study it left and right. And that's what got me to where I'm at right now. So it's more so like, I want to be able to give back to the community and do the same thing for y'all, like how it was given to me. Make sense?
100%. Thanks so much, Mike.
Yeah.
Yep, no problem. So I will try to get this video. I don't know how long it's gonna take to like convert it, but I'm gonna try to upload it tonight. That way y'all can go ahead and like roster recordings and stuff. But if anybody else doesn't have any questions or anything, then I'm gonna go ahead and I'm going to stop it right here. And then y'all could just catch the rerun on my YouTube channel. So my YouTube channel is, if you just type in Mike Lito on YouTube, then you guys can find me. Make sure y'all hit the like and subscribe button on the videos, and make sure y'all like, if y'all got anybody that's aspiring to like trade or anything like that, make sure y'all like send them the link, send them to YouTube, have them subscribe and stuff, because ultimately the way I look at it is the more people that I got that's engaging with me, that's giving me feedback, commenting on the videos, or like even writing in the channel chat, that gives me feedback to let me know like, okay, I'm doing something that's helping them. And then that makes me want to do it even more, to let me know that I'm helping y'all along your journey. So the feedback, the subscribes, the likes and on videos, the comments, all of that, I greatly appreciate all of that. So continue to do that, continue to share it. Like anybody's welcome in my chat, anybody's welcome on YouTube. So y'all be, y'all feel free to continue to share it, share the links. And anytime I do one of these calls, y'all can send it to all your friends, unless I say it's like private or anything. But besides that, everybody, good luck on your journey, embrace it. And this is what I've been doing this a lot the last couple of weeks, but just giving motivation to everybody in the chat, because ultimately you guys, you can have anything that you want in life, but first you have to believe it for yourself. So with that being said, y'all just make sure y'all stay focused on your own journey. Don't look left, don't look right. Don't try to compare yourself to the next person. Focus on your journey and what you have going for yourself. And ultimately you're going to get it whenever it's ready for you. So y'all make sure y'all have a good night. And then I will post this video on YouTube, and I will see y'all in the next one.
Thank you.
Thank you.